What do you say to voters who have concerns about your capabilities to serve?
Well, I took 2 tests, cognitive tests. I aced them, both of them, as you know. We made it public. He took none. I'd like to see him take one, just one, a real easy one. Like go through the first 5 questions, he couldn't do it. But I took 2 cognitive tests. I took physical exams every year. And, we knock on wood wherever we may have wood, that I'm in very good health. I just won 2 club championships, not even senior, 2 regular club championships. To do that, you have to be quite smart, and you have to be able to hit the ball a long way. And I do it. He doesn't do it. He can't hit a ball 50 yards. He challenged me to a golf match. He can't hit a ball 50 yards. I think I'm in very good shape. I feel that I'm as in good a shape as I was 25, 30 years ago. Actually, I'm probably a little bit lighter.
Look, I'd be happy to have a driving contest with him. I got my handicap, which when I was vice president, down to a 6. And by the way, I told you before, I'm happy to play golf if you carry your own bag. Think you can do it?
What's the biggest driver? It's a 6 handicap of all.
I was an 8 handicap.
Yeah.
8. But I have,
I've seen you swing. I know you swing.
Hey, let's
not act like children.
President Trump, we're going to turn.
Let's not act like children.
Coming up today, my reaction to the presidential debate. Who's really running the US government? Is Biden about to be replaced? How markets are reacting, along with the rest of the world. A look at the latest inflation, consumer sentiment, and Warren Buffett backs away from the Gates Foundation. Hey, what's up guys? Welcome back to the Daily Market Review. Thanks very much for tuning in with me today. And if you're new here, welcome. If you're into trading and investing in stocks and want to keep up with all the latest developments in financial markets and news, then hit that subscribe button and this video will show up in your feed every day. And as always, huge shout out to all my loyal viewers who click that like button and continually help this channel reach new heights every month. I really do appreciate all that. And let's dive right in. Got a bit of interesting price action to finish the week out. Also finishing out the second quarter and the first half of the year. We're entering Q3 in the second half next week. Might have been a little bit of window dressing to finish out the half. And looking at market color, a bit mixed overall. Still a lot of dispersion in this market. We did get a few heavy candles there today, which I'll show you soon. It was once again small caps leading the way today out of all the indices. And just looking at the spread of small caps to large caps, finishing the week near the highs. Now starting to look more and more likely like we did bottom out last week as small caps got significantly oversold. And that's just as much a case as mega cap tech pulling back as it is a bit of money rotating into small caps as well. Some pretty heavy candles here on the biggest stocks in the market. Apple falling down 1.6%. Microsoft as well. NVDA still consolidating for the week. Bit of a sharp pullback there for Amazon. A little bit so for Alphabet. Meta the worst performing, down almost 3%. And Tesla the best. Actually breaking out to new multi-month highs today. And so it looks like the options market was right. PCE came in as expected. The market didn't move much at all. Here's the VIX, which actually increased a little bit for a Friday. Normally goes down. And two things that are super low in this market is realized volatility. The actual movement of the stock market currently tracking at an annualized pace of 7.49%. Just going out to a weekly chart on that. Super low. The big indices are just not moving around much at all. And so that's probably explaining a bit of the volatility risk premium because realized volatility is so low. What's also on the floor is implied correlations. Stock market really not moving like a school of fish. A lot of dispersion. Stock pickers market. Stocks trading more off their fundamentals than the market. Meaning there's not much systematic risk priced in, and it's a good time for diversification because you can get a lot of different kind of returns out there in individual assets. There's the 2-year government bond yield. Dipped down today, found its footing. Got long dated yields picking up really strongly today, potentially forecasting some strength in the US economy ahead, which caused a really sharp fall in the popular TLT ETF today. Down almost 2%. High yield bonds turning back a little bit, the dollar holding ground, and what was surprising was also Bitcoin. Given what happened last night in the debate and the new odds now for a Trump presidency and him coming to favor, I would have expected a bit of a bounce in Bitcoin. However, it's still looking a little heavy here as well, along with those big NASDAQ stocks. And so short term in the market, we are getting a bit of a bearish divergence on the DSI. However, we do have some momentum here on the trend strength, like the big tech stocks. It is looking a little heavy and potentially toppy here, but volatility and dispersion is so low, the market's just kind of in a bit of a gridlock, trading really thick still. So I'll take the cue from the options market and not expect any big sharp moves anytime soon. Have a stick with me and I'll come back to the charts a bit later on and show you what else I'm seeing out there. And just before diving into the daily market review, just want to quickly let you guys know of a new product I'm launching soon on the 8th of July. I think I've been working on for a little while now. which I'm really excited to share with you guys, as I believe no one else in the trading community is doing something similar. However, I won't go into it here on the Daily Market Review. I'm going to upload a video to the channel this time tomorrow, going more in depth about this. For those of you who are interested, come back to the Click Capital channel this time tomorrow to learn all the details about it, and I'm interested to hear your feedback about this new service of mine as well. So stay tuned for more on this. But for now, let's just move on with the Daily Market Review, and I'm sure a lot of you saw the presidential debate last night between Donald Trump and Joe Biden, which has been widely seen as Biden failing. And in all fairness, I thought the CNN presenters were actually quite neutral. However, according to CNN viewers, even 67% of them thought Trump won the debate. We've got other reactions from billionaire hedge fund manager Bill Ackman saying, how can anyone in their right mind believe Biden can serve another term? It's not even clear he can finish this term. What is his family thinking? Where are his closest friends when he needs their counsel the most? And so I think we all can agree it was pretty lowbrow stuff. A lot of tit for tat, name calling, both claiming each other as being the worst presidents in US history. Bit of a step down from the last presidential debates we've seen in the past. And so even though we hadn't seen Biden for a week as he was prepping for this debate, and he was clearly on performance enhancing drugs, given the fact he only blinked a couple of times throughout the whole 90-minute debate, he's clearly flailing. And judging by those long blank stares and keeping his mouth open, they're classic signs of neurological decline, maybe something like Parkinson's or dementia, which is a bit worrying for someone who arguably has the most important and toughest job in the world, which is leading the world's largest economy and its people, and kind of makes you question who is really running the government. Because if that's the performance we got from Biden with a week of prep, the whole debate on his own conditions at CNN without a live audience, muted mics, and on performance enhancing drugs, then what's he like behind closed doors on the fly if he's really presented with a big decision? This is the man with the nuclear codes. If put in a situation, the buck stops with him, making the biggest decisions for America and the world at large. So who is really running the show at the moment? And so we've seen a sharp repricing in the odds of a Trump win. And as investors, what does that mean for markets? Well, initially E-mini futures started rallying all the way throughout the debate, were up big overnight, somewhat pulled back during the day, back of these higher bond yields. So in a similar setup back in 2015, when we found out Trump was going to win, markets rallied sharply to a lot of people's surprise. So Trump might be marginally better for equity markets because of tax cuts and deregulation. Trump's also a big supporter of conventional energy, likely to be more of a positive for oil and gas, even though the states have been pumping out a record amount of oil and gas under Biden. Trump's plans for fiscal loosening could be positive for the dollar, with some saying they're going to avoid treasury bonds with maturities longer than 10 years. Looking at some more key takeaways from the debate last night and the knock-on effects that could have to financial markets, now that we're looking at an increased likelihood of a Trump win. According to this article, there's nothing to suggest that we will see budget restraint in the next administration. China hawkishness will be a common talking point. However, again, Biden left in all those Chinese tariffs that Trump implemented. With Trump back in, the tax cuts are likely to remain, where Biden's proposing a 46% capital gains tax, especially targeting the wealthy and even talking about taxing unrealized gains. Banks, steel industries, looking to reshore production, move further away from China, anti-globalization, looser rules and regulations, pretty much the same setup that got stocks rallying in 2015 going into 2016 as well. And so even though the S&P 500 and NASDAQ finished the day down, energy sector and the financial sector, and especially regional banks, rallied quite well. Along with REITs, what didn't do well was the military industrial complex, falling over 0.5%, utilities falling as well, and consumer discretionary. And of course, since Trump is big on fossil fuels, clean energy pulled back pretty sharply, 3.5%. Also not good for us cannabis investors. Trump hasn't really come out in support of cannabis in the past, so that sold off pretty sharply today after we bounced back nicely the last week. However, just like crypto, he could flip on this as well, as more and more Americans are supporting legalization. Interesting was China actually finishing the day higher. Has been pretty weak this last month, but one would think since Trump's tougher on China, that would have pulled back a bit more. Also interesting is Trump's stock itself, Trump Media, finishing the day down over 10% on volume. One would have assumed that finished higher as well. So some interesting moves off this, and I'd say the biggest is that sharp pullback in long-dated bonds. Even though we didn't really get a strong rip in the dollar. And given PCE came in as expected, markets seem to have run out of steam there, at least in mega cap tech. Seem to be getting some bearish candles there today. But what does this mean going forward, and what could happen from here? Since a lot of people, even Democrats, are saying Biden needs to be replaced, it's most likely not going to make it to the next debate. And the reason Democratic Party arranged for the earliest presidential debate on record was to kind of test Biden to see if he could stand up to Trump early, to give them enough time to replace him. However, that won't be an easy thing to do within the Democratic Party and to convince the public. Doing a late game shuffle is not a good look. However, it's widely considered that could be Gavin Newsom, Democratic governor coming out of California. Seems to be waiting in the shadows for his opportunity. And certainly betting markets are pricing that in too. Big sharp change overnight. Going into the debate, Biden was priced at a still pretty low 36% chance of winning. It fell off sharply, currently sitting at 24%. Trump was 55% going into it. He's now 58%. And a big change for Gavin Newsom, 2.7% going in. Here he is at 8.2%, and there's the rest of potential candidates. And personally, I would have thought RFK would be above Michelle Obama. There doesn't seem to be much political support for Kamala Harris. And so at this stage, the Democratic Party has a big decision to make, and they probably need to make it pretty soon, because right now they're wandering through the desert on a horse with no name, so to speak. But there's still a lot of people hanging in there for him. Some say it's really his wife driving the show, maybe Barack Obama as well. And who really knows who's calling the shots behind the scene? We've still got others like Mark Cuban, who said he's going to still vote for Biden over Trump, saying he won't vote for anyone that doesn't believe climate change is real. Meanwhile, he owns 3 private jets and emits more carbon emissions in a week than any of us will in our entire lifetime. Just another classic example of a woke elitist who says, do as I say, not as I do, and just likes to be seen as saying the right thing, doesn't actually want to do it himself. And according to the Democratic Party, after the debate, they still said Joe Biden was the winner. However, I think there's a good chance they'll have to do an about-face and swap him out, and which will be a big historical move for US politics. And the rest of the world is watching. This not only has big implications for financial markets, but also foreign policy, as Trump's expressed a desire to negotiate an end to the Ukraine war, and has a track record of not wanting to send a lot of money overseas, instead wanting to spend it at home. And so the rest of the world is probably preparing for a second Trump presidency. And I understand there's a lot of people unhappy with both candidates. In fact, the percentage of voters saying they have unfavorable opinion of both the Democratic and Republican candidate for president currently at all-time high. Almost a quarter of Americans don't like both of them. And so to my American friends watching this, I'm sorry you have to go through this embarrassment. America really is a great country, full of brilliant people, and you guys deserve a lot better. So hopefully in 2028, there's some really good candidates to choose from. However, Trump and likely Newsom is going to be your 2 options to choose from come this November. Because honestly, it is hard to see Biden staying in office for another 7 months till January next year, let alone another 4.5 years, taking him to 86. The consensus seems now that it's time for him to hang it up and hand over the baton to someone else. Anyway, as always, we'll follow it. The biggest and most important news story this year. Looking at the here and now, got PCE inflation coming in as expected, both on core and headline, increasing 2.6% year over year, showing that measures of inflation of late are trending in the right direction. After we just got a couple of hot prints the last couple of months, this one's getting back down to those lows in mid-late last year. There's a look at the long-term chart of consumer prices. Less energy, food and shelter, yearly percentage change, dive right back down. We're all just hoping it's not like the early 70s, when that dove right back down after a big wave of inflation, only to skyrocket back a couple of years later to new all-time highs. We also got to look at consumer sentiment. Coming in a bit better than expected. A lot of Americans still struggling with embedded inflation though. Kind of keeping the overall consumer in a middle ground. Still holding up okay. And there's a look at the overall inflation adjusted consumer spending. Percentage increases month over month. Headline coming in at 0.26%. Biggest increases coming in recreational goods and vehicles, clothing and footwear, transport, and the biggest decreases in food services and accommodation. What was a big risk in financial markets last year and coming into this year was the commercial real estate market. That huge cultural shift kicked off by COVID, moving out of the office and working from home, a lot of which still persists today, caused a big change in office buildings. And while some of them have been able to repurpose into residential, it's a lot easier said than done. And this trend isn't going away. In fact, it's accelerating. Currently, 20% of offices in America are empty, and that could rise to a quarter come 2026. But it hasn't really spilled over to financial markets. The Fed's already got in there and backstopped a lot of these regional banks. We did have a bit of a scare last March. However, looking at high yield bond market, it's really not worried. There's no signs of systematic stress or big tail risk events on the horizon anytime soon. In fact, corporate earnings are expected to accelerate the rest of this year after we've already had corporate earnings recession, finishing in the middle last year. 3 consecutive quarters of contracting earnings growth. The last couple of quarters are back to beating expectations, and that's set to accelerate to the rest of the year, along with good projections for the overall economy, currently as it stands from Goldman Sachs. Even though we just got 1.4% for Q1, that too is expected to accelerate the rest of the year, and they're projecting the economy will grow by 2.2% next year. However, some say a tech reckoning is coming, and then it could be time to play defense. Large cap tech has got too far ahead of itself, certainly been on a hot run, and we definitely got some bearish candles in there today. However, the fundamentals still justify plenty of stock price strength. Just look at that quarterly sales growth from NVDA. Absolutely crazy numbers for a mammoth company of its size. It's grown like a micro cap. It's just a couple of years old. Not a 30-year-old company with a $3 trillion market cap. It's just off the charts. And even Meta and Microsoft Alphabet and Amazon. Still really impressive numbers given their size. However, like I've been pointing out on the channel, their growth is expected to de-accelerate going into the rest of the year, and small caps earnings and the rest of the market's growth is expected to broaden out, narrow that big gap we've seen the last 2 years. And just looking at valuation metrics for all the sectors, the next 12 months PE, energy the lowest, 11.9, then financials 15, of course up the top is infotech. And looking at current relative valuation to historical average, REITs are actually 2 standard deviations below the average. However, according to BCA research, stocks are going to fall 30% as the US economy heads for a painful recession, which they're definitely going out on a lone island, revising down their target for the S&P 500 to 3750 by the end of this year. We'd have to see a huge shock for that to happen, in my opinion. That definitely could happen over the course of a year or two, going into 25, 26, as it's true, most of the time stocks struggle when bond yields rise, just like they did today. See that bond yield eventually invert itself, the long end climbing a lot more than the short end, could add a bit of overhead pressure on stocks. However, the stock market's just so well supported and backstopped by the Fed, corporate buybacks, amount of corporate cash, their earnings are trending up, AI boom. We'd have to see a real shock or a real weakening of the consumer for all that stuff to reverse, which could very well happen next year or into 2026, as there are plenty of signs of late stage business cycle, with one of them being the average stock correlation and sector correlation getting down to new all-time lows, really high dispersion in the market, which won't last forever, although it can persist for some time. Just means we're moving closer to a top than a bottom. Moving on, we just heard Warren Buffett say he'll put his $130 billion fortune into a charitable trust run by his children after he passes away. Most of it was set to go to the Gates Foundation, who he'd been donating to almost 20 years now. He resigned from the board a few years ago, and I think his plan was to sell 4% of his Berkshire shares, which he has 99.5% of his net wealth in. He also runs a personal trading account that he has done for decades, which apparently has about 600 million. So he's just feeding Berkshire shares into the market every year, and that was set to continue. However, after he passes away, the Gates Foundation will no longer receive any more donations from his estate. And interestingly, this is just a month after Bill Gates' ex-wife Melinda Gates announced she was going to quit the Gates Foundation and will part ways and will get given $12.5 billion to go and start her own foundation where she focuses on helping women and girls around the world. And there's a look at the Berkshire Hathaway stock price, tracking sideways for a few months. You could kind of think of this like a domestic American ETF that doesn't have a huge management fee, as they mostly own domestic US businesses and have a great track record of creating value for shareholders, not wasting any money and being accountable. Pretty sure that culture will continue on for a long time after Warren's passed. Moving on to commodities, as we've been noting lately, oil has been super strong in the face of some fundamentals suggesting it could trade lower, with the market potentially worried about a spillover and re-escalation and conflict after things have been quiet there for a few months, still bubbling away in the background, and doesn't look like it's going to stop anytime soon, especially with Ukraine. Russia's revenues from oil and gas, big driver of their economy, is on the increase, so they've got plenty of finances to keep funding their war, and it doesn't look like they're going to give up. I think it's either going to reach a boiling point, blow off top, or will be negotiated somehow, some way. But regardless of geopolitics, commodities still at a cycle trough relative to stocks. Looking at base metals in the green, energy in the orange, and precious metals in the purple. Relative performance, S&P 500 going back 30 years, seems to show signs of bottoming out. What's also been doing really well lately is Indian stocks. After we saw the President Modi secure a third term, these reinforced principles, Hindu nationalism, economic liberalization, socially conservative, seems to be working for the economy and the stock market. There's a look at a long-term monthly chart of the Indian stock ETF traded in New York under INDA. Super strong and breaking out there. Not doing as well, but could be presenting a value opportunity is Brazil on its 6 monthly close lower. Dividend yield now 7.7% on the really well-traded ETF EWZ. Also potentially cheap Singapore. Dividend yield 4.58%, and maybe South Korea as well. Bit lower dividend yield of 2.5%. However, valuations are good, and it is a really well-run economy, and technically could be looking primed for a breakout as well. There's a look at the economic calendar today. PCE coming in line as expected, and consumer sentiment a little bit better than expected, but still lower than the last print. Not much changing for Fed fund futures. Still about 62% chance we'll cut in September, and a little bit lower chance that we'll cut in December. Fear and greed index moved back into the fear zone at 44. Corporate insider has gone on summer. Looking at some of the biggest insider purchases this last week. Similar to last week, seen insiders load up on energy shares and once again sell out of some of these hot stocks. Eli Lilly, NVDA. I saw Jensen Huang offload more shares this week, $44.5 million worth. Snowflake and a few others like CrowdStrike, DraftKings and Meta. Just looking at the calendar next week, we'll be closed on Thursday the 4th of July. Get a few PMIs earlier in the week along with a look at the jobs market next week. JOLTS, ADP, and the big one, first Friday of the month, non-farm payrolls, unemployment rate, expected to come in at 4%. That's what we got last time. That would have come in at 4.1, or who knows, even 4.2. Fed may just go ahead and cut when they meet at the end of the month, 31st of July. If not, I'd say there's a good chance they'll cut in September. And there's a look at the price action in some financials and banks today. Really liking the increased odds of a Trump win, because even though we got that big rip and long-dated bond yields, which they haven't been liking of late, seem to have done a bit of a U-turn today and finished out the first half pretty strong here on volume. JP Morgan as well, looking pretty strong. Okay guys, that caps another interesting week in markets. Getting some interesting pricing out of those increased odds of a Trump win. We'll just see what sort of odds we get if Gavin Newsom is going to come in and replace Biden. Certainly will be interesting. But for the here and now, technically speaking, market looks to have stalled out a bit. Those heavy candles on mega cap tech, sharp jump in long-dated bond yields. Oil still sitting pretty. Bit of a rotation into small caps value, but we've still got volatility really low, especially realized volatility, super high dispersion. We'll to see what next week brings us when we get all that data on the jobs market, and we'll see how markets react to a potential Biden replacement, which if it's going to happen, I would say it's going to happen pretty quickly in the next week or two. Anyway, we'll see what happens. That's all just my opinion, analysis, and thoughts. That's all I've got for you this week in the Daily Market Review. If you're interested to learn about the new service I'm about to launch on the 8th of July, then come back to the Click Capital channel this time tomorrow, and I'll let you know all about it and why I'm excited to do something completely different that, as far as I can see, no one else is really doing. Otherwise, thanks very much for tuning in. Have a relaxing weekend, and I look forward to making you more videos next week. Cheers.